I want to give a little bit of context before I get into this question or whatever is in front of my screen now. So basically, a follower of mine, he went and he built a really cool indicator which overlays two things on top of his TradingView charts. So the first thing here is a whole bunch of different trade criteria which he uses to get a better understanding of what is the current market regime that this coin is in. So like how many times has the moving average, how many times has price touched a moving average or crossed over a moving average? Was the volume increasing, decreasing, or flat? What was the approach into the level? Is price above or below the VWAP? And what about the moving averages? Do they look bullish or bearish or what, right? That's the first part. And then the second little overlay is a little cheat sheet that he uses to determine the quality of the trade and also whether or not he should actually take a trade from that specific strategy. So he's got the mean reversion longs, mean reversion shorts, Momo longs, and Momo shorts, or momentum longs, momentum shorts. How many of the criteria have been met or which are in favor for that specific strategy? The closer that number is to 5 out of 5, the higher the quality of the trade. The closer that number is to 0 out of 5, the worse or the lower the quality of the trade. And then here, this is the thing that I really like, is what action is recommended to take. So if we have a high quality trade, he should consider taking it for that specific strategy. If we have a low quality trade, he should consider maybe not taking it or being a little bit more hesitant if he should actually take the trade. So I want to give my initial response to this first. So it's really inspiring to me when I see a follower of mine who I haven't had like that many interactions with go out of their way to really like properly consume my content, try to learn as much as possible from all the articles, the PDF guides, all that, to really properly digest it, go and try to build something of their own with their own little spin on it, and then send me the code of all of this tool for free. I didn't ask for this to be made, but he went and built it, and he sent me the code and was like, hey, look what I've built. I think that's so awesome. It's actually that kind of mentality, which really, like, I think is a big contributor to success, which is just like not waiting for permission or not waiting for someone to tell you to do something, to just go and do it, and then try to move forward with it and just continuously keep trying to move forward regardless of circumstances. And then to also go out of your way to reach out to me and to give the code, to be like, hey man, like you could literally go and build something like this and hopefully it gets you leads into your Telegram. Like do whatever you want with it. You have my full support. This is incredible. So like I really appreciate that. Really appreciate that. And I think that yeah, for anyone else who is watching this video, I hope this kind of behavior inspires you to also take initiative to go and build stuff, to go and take actual action, to do stuff, right? Because no amount of reading or watching content, and it doesn't even have to be my content. It could be from anyone else, right? You can read as many articles as you want and watch as many videos as you want. Nothing is going to change unless you actually go and do something about it. So this guy, he actually went and did something. So that this is the stuff that actually moves the needle, right? This actually moves the needle. So yeah, big respect, and yeah, hopefully it inspires other people to yeah, to do something similar. And again, I really want to emphasize, like, you guys, and also the person who asked me, who's in contact with me, who made this, you don't have to just learn from me. I really encourage you to learn from as many people as you can. You can learn from anyone. You can get ideas and insights from anyone. But okay, anyway, let me go and give some feedback on this tool. What do I think could be improved with this tool? So whenever I try to think about improving something, I always take the exact same framework, which is what can I remove? What can I do more of? What can I do better? And then is there anything new that I can add to it? So first let's cover, is there anything in here which is unnecessary and that we can remove? So I think the first thing that we could probably remove are these two things. I don't think these two things are necessary. I don't think they're necessary because already within a split second, we can already tell whether or not price is above the VWAP and whether the moving averages look bullish or not. As in, I could disable the VWAP, I could disable the moving average indicators, and you could still probably tell how the VWAP and how the moving averages look like. Look, I'll show you. I'll show you. So imagine that we have, this is price, right? This is price. This is since the day began at 0, 0, right? At 0, 0. God, my handwriting. So that's 0, 0. How would the VWAP look like? So in the very beginning of the day, the VWAP is going to be really closely moving with price, and then gradually it's going to decouple, or it's going to like average out, right? So the VWAP is going to look something like that. And then the moving averages, they're going to be like, they're not going to be anchored to the start of the day. They're just going to be like whatever the look back window is. So the first moving average might look something like that. And then the second one, the faster one, might look, I don't know, something like that. Or the slower one, sorry, might look something like that. I don't know. But the point is, within a split second, even with the indicators disabled, you could already tell that it's above the moving averages and it's above the VWAP, right? So the whole point of having the VWAP and the moving averages there is just to to instantly tell what is the overall direction of the move and where are we relative to the average price of since the day began. So I think these two tools already solve for that. So I don't think we need this as well, because do we really need to see this, or can we already just like look at the chart and see it within a split second? So I don't think this is necessary. Now you might argue, well, hold on, my tool below, it counts how many of the 5 criteria were met, right? It's counting based of this. I still think that it can count 5 different things, but you don't need to have 5 things overlaid here. You can just have these 3, but it can still count 5 things, and it could just count based off whatever it sees in the chart, rather than counting whatever it sees in this overlay. So I think that's fine. Like, I think that's fine to do. Okay, so that's the first immediate thing that I think we could do. We could just remove these 2 things entirely, and we just don't even need it. Okay, what's the next thing? Apart from removing, I think, I think that covers removing. Now, what can we add or do a little bit more of, or do a little bit better of? I think that the thing that probably we need to address, and this might actually be in the code, but I just didn't see it because I didn't read the code. But I think it'd be great to have some clear documentation somewhere. It doesn't matter where. It could just literally be in the Pine script. It could just be anywhere, separate Google Doc, whatever, where you have the clear definitions for how each of these variables are actually defined, right? So this is really easy. This is just, is price above, if price is above the VWAP, then it will just print this. If it's below the VWAP, it will print something else. But for how many times has price crossed through the moving averages, I think it will be better to have written somewhere, is it looking back the previous 4 hours? Is it looking back the previous 8? Or do we, which is a static variable, like is it previous, the previous n bars, right? So is n a static variable, like previous 4, previous 8? Or is n a dynamic variable, such as how many times has price crossed the moving averages since the regime began, or since something happened in the past, because that way, this isn't always going to be a fixed value. It's going to be locked onto a certain event, which can sometimes happen 2 hours ago and sometimes happen 8. And I think a dynamic approach or a dynamic definition would be a little bit better. Or this is my opinion at least, because sometimes what you can have is you can have something like huge staircase and then choppy range. And then you can also have choppy range and then huge staircase. If they're both, let's say, 8 hours long, and your definition is how many times has price crossed the moving averages in the last 8 hours, in both of these instances, A and B, you're going to get the same number of moving average crossovers. But when we actually look at the price action, they look very different. I would actually really want to trade momentum on this one. I would probably not want to trade momentum in the other one because it's a lot more choppy, right? So the recent, whatever is happening recently does matter a little bit to me. So we're going to need to find some kind of definition for picking the starting point to be somewhere within this region. We're never going to be able to cleanly, perfectly, super duper precisely define that, because if we did, then we'll just be making infinite money with 100% win rate, right? But we can have like a vague or slightly like an acceptable definition for the starting point of a regime, and we can just count based on that. And the way that we can do that, I think I covered this in a separate video that someone else asked me, which is we look at how many times has the moving average crossed in the previous, let's say, 1 or 2 hours, and then we have these in little sections or little blocks. And if the number has dramatically changed in the current block relative to the previous block, that could mean that something is happening. And whenever it crosses a certain threshold, whenever it the rate of change is drastic enough to cross a certain threshold, we're going to use that as our definition for N, or the starting point of the regime, and that's how long we're going to be counting, right? Because that way we can say, okay, well, it was ranging and then it started trending a lot, and then we're counting how many times has the moving average crossed since the trend began over here. That's going to be quite nice. Or if we're doing the opposite, which is something like this, how many times has the moving average crossed, how many times has price crossed through the moving average since the trend ended? Because then it can give us a little bit of a better understanding of like how easy is this range going to be to trade mean reversion in, right? So that's the first thing. I think we would want to get some clear definitions on this one. And also the other thing that really matters is that definition, is it a static definition, or is it a little bit more of a dynamic one? So that's a big one for the moving average crossovers. And the same exact thing for the volume and also the approach into the level. The volume one, I think, is I'm assuming the way that this is done is it's just looking at the custom volume indicator, and it's just looking at whether the current color is red or green. Oh, sorry, red or blue, or whatever color that you've set it. And if it's blue, cool, it's increasing. If it's red, then it's decreasing. That's fine. That's an absolutely acceptable. It's fine. It's a fine starting point. Like having something like starting with a fixed variable is fine. I'm not saying it's bad. I'm saying it's fine to start with. But if you want to improve it over time, you'd probably want to get that static variable and somehow think about how do we transform it into something dynamic. The approach into the level, I would be really careful with this one. This one is a pain in the, I'm not going to say the word, but it is painful to try to define. It's challenging. It is quite challenging. So I would love to hear how you actually how are you actually defining this, because The reason why this one specifically is so challenging to define is because the look back window naturally on this specific variable, it has to be low. It has to be low. As in, like, we can't look at the previous 4 hours to determine whether something is grinding or whether it's spiked into the level. Maybe we can, but I have just no idea how to do that. But naturally, this needs to give more weight to whatever is happening now rather than before. So, like on this one, I don't know if I would call this a grind because look at this candle, right? It went whack into the into the recent resistance level. Like it's a pretty big, like the size of this candle is significantly larger than the size of the nearby candles. And if it's like 4 or 5 or like a large multiplier of how many times bigger it is than the average candle, I don't know if I would want to call it a grind. So I would be really careful with this definition, right? So yeah, the main thing is let's get some documentation for how we're defining each of these things. That's like the first biggest thing that you could do to improve this tool, right? Let's get some clear definitions. Now the next thing, this is something that I want to comment on rather than me giving you clear next steps. Like an immediate, what can I do right now to make this better? Pull up a Google Doc. Let's define each of the at least the top 3 things. That's like the first immediate next step. Now let's talk about this, where I'm not going to give you next steps, but I'm just going to give you stuff to think about. Not all of these variables are weighed equal, as in they're not all equally as important. So for example, whether or not price is above or below the VWAP, and whether the moving averages look bullish or bearish, I don't think these are going to be as important as these 3. Reason being because these 2 are actually correlated. As in, okay, if you have price above the VWAP, like if we have price action like this, right, since the day began, it is definitely going to be above the VWAP, and it is definitely going to be above, the moving averages are definitely going to be bullish, right? They're correlated because a VWAP and a moving average, they're 2 very similar things. The only difference between this and your moving averages is either A, the look back window. Actually, I think that's really it. I think it's just the look back window. Like if the day started like 200 candles ago and you're looking at a 200 moving average, the lines are going to look really similar. Like they're going to look really, really, really similar. So I don't think that I would weigh both of these things equally. So whether or not something is like what I mean by that is something could be like a 2 out of 5, and then something else could be like a 4 out of 5, but this could still actually outweigh this because maybe actually, you know what? Let's say that something is a 4 out of 5, but the way that it approached the level was something like this. It did like a huge vertical spike into it, but it still meets the other criteria. And then something else looks acceptable in these 3, but maybe, I don't know, one of them is off. I don't know. The 2 out of 5 could maybe potentially be could be better. I think this might be a little bit more applicable to mean reversion rather than momentum, but still, the main point is that I would not weigh each of the variables equally. We can't weigh them equally because some of them have more impact than another thing. Therefore, if we know that we can't take all of them equally and we can't take them, like, we can't just put a blanket over this and be like, yep, if it's 4 out of 5, we should definitely take it. If it's 2 out of 5, we definitely shouldn't take it. I'm not saying that. What I'm saying is, whatever you have here, use it gently. Don't allow this to dictate whether or not you can or cannot take trades before you have the clear weightings. Use this just as like a discretionary guide rather than something which is like super duper hardcore. And this is literally determining whether you can or can't take trades, because we know that this can't be super duper accurate. We know that it can't be, but we can improve it by getting clearer definitions on them, and then running maybe some back tests on our own past trades, and also running some back tests on just general historical data. So we're looking at how valid is this compared to that on a particular altcoin during a specific slice of time. And we can run a whole bunch of tests like that, and then see how significant is this compared to that. And then we can give the weightings a little bit more. We can take the weightings more seriously. How I approach weighing stuff is actually going to be based on two things. So one, it's all going to be based on data, but basically it's going to be on how much data do I have, so the quantity or the sample size of the data, and then also the like the actual result of the data. So there are two things in here which I think about when weighing something. Okay, let me give you an example. Actually, no, sample size, result. Okay, third one is the variance. There we go. That's what I meant. The variance. This could be translated into how discretionary is, or how subjective is your definition, right? Or how good or how clear is that definition, or how accurate do you think that that definition is? So I'll explain each of these. So sample size. If we tested a pattern, but we could only test 40 instances of it versus something that has 400, and let's say all other factors are equal, I'm going to care more about the 400 rather than the 40. Okay, what about result? What if the sample size on two different things that we're testing is pretty much the same, but one has a better result? Let's say one on average has like a 56% win rate, and the other has a 54% win rate. Then I'm going to give this one more weight if sample size is roughly the same. And then variance, this is how clear or how systematized or how specific is the definition versus how broad is the definition. I guess I could say, like, I'm trying to think of an example. Okay, if you're really, really specific with how you define this fast spike, okay, how many lines or how many conditions are there in defining this certain thing? So like the more specific you are, the more, like, I guess the more text there is going to be to define it. The more vague something is, like, is price above VWAP, yes or no, the less stuff there is and the more broad it is. So the more specific that that something is, like the more specific you are on an instance, the more I believe the more trust I have in the data that is being produced, because it's basically collecting it on something that is like a very specific type of event. Now, there is the argument that, like, oh, well, like the more complex you get here, the more overfit it is, or like the more high chance there is of overfit. This is, I'm going with the assumption that, actually, you know what? Let's scrap this. Let's just have a separate topic or separate thing of just like how statistically, oh my God, my spelling there. Statistically, clearly not A+ in spelling. Statistically significant. There we go. So this is like, how robust is the data that you have? Or like, is the data of this 400 sample size and 56% win rate on the thing or the idea that you were testing? Is this like a pure coincidence, or does this hold up when you like when you rerun the test again? If you like switch up some parameters a little bit, like you add a little bit of noise to the data, is the result pretty much the same, or does it like explode and go all over the place? So how robust or how statistically significant is this data that you collected? The more statistically significant it is, the more I can trust it. The less statistically significant it is, the less I can trust it. In simple terms, the more data that I have on a particular thing, the more weight I'm going to give it naturally, because the more understanding I have about that certain thing. So like, let's say whether or not price is above or below the VWAP, I can at least with great confidence be like, I have a lot of data to show that momentum longs, when price is above the VWAP compared to the below the VWAP, they have a higher win rate when they're above rather than below, based on like, this is like, I have a pretty large sample size on this, right? So I'm going to take that very seriously. Whereas something else, like, I think this looks bullish based on my gut feel of how the Twitter sentiment is. I don't know. That's like very subjective, right? And I have no data on that. Something that I have less data on, and it's just more of like a more of a subjective or a discretionary variable, I'm going to give it a lot less weight, right? So yeah, the more data and the more data I have about something, and the better the data that I have about something, the more weight I'm going to assign to that thing, the more I'm going to take that thing seriously. But if something has like really low sample size, or it's just not really that robust, or it's just a very discretionary or a subjective, or it's just like a gut feel kind of thing, I'm not going to be taking it as seriously in the weighing process. I hope that makes sense. But okay. I think I covered that. I think that's pretty much the feedback that I want to give. I'm pretty happy with that. So yeah, immediate next steps. Let's get some definitions on this. Then after you get the definitions, let's run some tests, some random ideas, random tests across each of these definitions, and see how much does this matter how much does this matter when compared to something else, right? So that's the first immediate thing. And then the second thing, just something to think about, don't take this too seriously. Keep this as just like a discretionary thing. You don't have to follow this like it's gospel. Just leave it there. Just leave it there on your chart. But yeah, don't take it too seriously. Okay, sweet. I think I covered everything there. Now, before I wrap this video up, I will not be using this for my leads. Unfortunately, I don't want to use someone else's thing to help me get leads. But for a very long time now, I've been thinking about, over time, I want to continuously build more and more tools which make it easier to, or which reduce the friction required in order to actually go and take a trade. Anything which makes trading easier for my followers, I want to go and build, right? So inevitably, I'm going to be building something similar to this, and I will probably be giving it out and trying to market it and all that. But I want it done in my way with my definitions and my specifications. But nonetheless, still super appreciate it. And I think that if you keep pushing with the stuff that you have built, your own understanding about your own way of trading is going to continue to improve, and you're probably going to learn at a faster speed as well. I think something that is very helpful, or something that would be very helpful, is if you show me the definitions for how you've defined these. You have the code already. You've given me the code. That's awesome. If you can go through the definitions, if you can run some tests and also share the data on those tests, I think that will be like magnificently more helpful than you just giving me the tool and then me just pumping it out as marketing content. But yeah, nonetheless, brother, thank you so much for building this, for sharing this with me, for sharing the code with me, and also asking me for your feedback. This has been, yeah, I love talking about this kind of stuff. It really just, it excites me, right? But yeah, I'm going to wrap up there, and yeah, thank you once again. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include like total combined within these two guides, there's more than 75 trade screenshots for you to study, like through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Like literally in the journal, there's a tab called educational resources. And in there, I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.